Everyone, welcome to your daily update for Solana BTC. Pretty quiet weekend overall, just kind of bounced around a little bit there. We've evened out liquidity on the daily. We're still looking a little bit more liquidity to the upside if we look at 7-day and 14-day timeframes. So, and we are getting it in the areas that we need it to be if we're going to actually have that little push up. So yesterday we had a couple of longs in play. One was up to 63,300 on BTC, and that has played out. And the other one was up to 65, about 65,500 or 65,800, I forget now, but we'll have a look. And that one we haven't gone to yet. So I've also just chucked out a tweet there, and I see that we have had a little structural level has popped it on the 6-day at 65,588, and that closes in 2 days time. So just one of the things about this is we've got, ever since June, we've basically been building support. So if we look at all these various different levels, we were bearish. So these are all bearish tops, and basically we've got bearish tops sitting there at about 77k. Now, after about the 31st of the 5th, or just say the start of June, we moved into starting to create bullish structure, and we've been building it through time. So basically starting with small stuff, 2 days, 3 days, and just recently we closed 16-day and 14-day timeframes. Now, most of these have just played out their minimum moves. So when you get the bottom of a range, usually after you get the bottom of a range, you get a first hold level. Once you get a hold level, you get some kind of move. So if it's a bearish range, you'll get the top of the range forming. You'll get a hold level. You'll get a short, and normally that first short, it's basically the highest probability trade you could ever find. It's gonna, and that's what these tools are for. Like if you look for these recent creations of ranges and then you just chart them up, you can normally find that, okay, well, that one's created a hold, or that one hasn't created a hold. And if it has created a hold, you got to trade. Okay, so things like these 16-day ones that have been created on BTC, they have had their final, or their first hold created. They've played out. Those longs are done. But we're not really seeing any kind of continuation. All we're actually seeing at the moment is just that first move playing out. So it's not exactly bullish unless we start to close up over some of the higher levels. And at the moment, we know we've got the bearish top. The lowest bearish top is just sitting there, or the most recent one is sitting there at 77k. And that is the area that really we would have to break that area if we actually wanted to break the most recent bearish resistance that's been created. Now, looking over at potential, so just with this tool, what it's telling us is it's telling us that these levels can become tops or bottoms if the price stays away from them for a certain amount of time. So we've got a couple of one-day ones here, which one-day levels do happen relatively regularly. But what this is telling us is the one-day support today, as long as we don't have any kind of flash crash in the next 3 hours, is going to shift up to about that 62k mark. So that's bullish. We're getting a couple of one-day supports coming in, and then we've got this bigger one on the 18-day, which would just be the natural progression of time. So basically over time, if price stays pretty level, then the time frame of the support is going to increase. The longer something spends either at a supportive position or a bearish position, bullish or bearish, then the higher the time frame develops. So in 2 days time, we might get this 18-day level forming, which is just your evolution of your 16-day, and we've also got some really big stuff for 112 days from now. Surprise, surprise, like where would you expect the bottom to be? Well, if it's like any other cycle, it's going to be around October, and surprise, surprise, you've got these really big time frames, bullish breaks that if we can hold these prices, we create that bullish support around that time. So there you go. But we also have the 65,588 level. And this could be the first bearish level we've seen come in on a 6-day time frame, and that closes in 2 days. So we've got a long that can take us up to that level, and I'll just see if I can find out what that is. So just jump into Discord. Okay, and so BTC. Let's just see. I'm pretty sure it was up to around 65 something. Where is that outstanding long? There it is. So most of these have all played out, and there's this outstanding long here, which is designed to push the price up to basically 65,743. Now, if we go and actually complete that in the next 2 days, then we don't create that 6-day bearish resistance. So that in itself is actually a bit of a sign. Like to develop or have sitting there the possibility of putting a 6-day top in, and then after that, if the price was to engulf something, we get some kind of move to the downside, etc. And that lowers that resistance level down from say 77, which it currently is sitting at, down to about 65,588. But if we get that last bullish long playing out in the next 2 days, then we touch that level, and if we touch that level, this is no longer potential to create resistance. So all you have to do is get up there and touch it. So that's what I'm looking at the moment. Liquidity is there to go up to that level. We've got that last long that hasn't played out yet, out of what, there's probably about 11 in there that have, and that's the only one that hasn't. And most of our shorts sort of kick in, or new shorts kick in from about 63,951 and up. So we can get there. We just have to start moving. And if we push to the upside, we might hit 63,951. We've got a very small 1-day short there. That could push the price back down temporarily. I've just seen that sort of play out on Sol, where we hit that 60. So I'll just see what that level was. Let's bring that up. So I just sort of jumping around a bit here, but we've got wrong screen, this one. So this was a bit of an interesting one. We've actually hit the body of this, but it almost looks as if we hit the body, or we just sort of front run this and then came back down. So just coming in, I'm just going to chuck a couple of lines on here, and then we'll flip to a lower time frame so you can see what I mean. So we'll just put a line on this. Going to chuck our fib on here. So this was one of the trades. Basically, it should have gone from 73,640 down to 72,821. And I know we're kind of splitting hairs here a little bit, but if we actually just look at what happened with that post this line, we never quite touched it. We got to about 73,632, I think. This was the highest candle. So 73,632, and then we came down to target. So we've slightly front run that, and then we've gone back up, and it looks like we're actually closing over that level 1 now and breaking up into that hold. So this is something that, from a data perspective, that would record as a failed trade, because it didn't actually touch the entry, and it came down to the target with about the third decimal place front run. But and this is sort of why automation is always kind of fun versus trading in real life. If you're watching this and you have a proximity alert, and you actually know that the price is approaching, because you should never just set your alert on the entry, you set it on the approach of the entry, you would see this kind of behavior, and you would just go, okay, well, I'm going to ladder in with half my position. I'll take the other half if it goes up higher, and you've got like a range trend up here. You could have chosen that as an entry, or any of these origin rejections on the lower time frame as an entry. But then after the trade actually plays out, you would say, okay, well, I'm not going to try and take that one again, because that looks like it's some kind of pricing oracle or a third decimal place front run. It's pretty realistic that that is the entry, and then there you go, there was your target. It worked through it, it took the liquidity, it closed back above it, and then it continued on. But one of the things to note about this is that is a real minimum move. So in, back up again. Didn't really go that much lower than that. In fact, that 15-minute candle basically just worked through it, went back up, created a nice trend to bounce off, and just continued up. And if we're starting to see these kind of minimum obligations happen on our shorts, that's quite bullish, because it's only doing the bare minimum. that it has to. And if you're only getting a minimum in a downside move, then it's usually because it actually wants to go up. So if we can hold up inside this daily hold today, we might actually end up recovering the daily trend on Sol, cracking through that and heading up to do a prior trend retest. And we've got one maybe two. Someone just ran the origin levels in the Discord. Let's jump back in there. Okay, so we've got, I think, a couple of longs outstanding on Sol. So there's all the different origin levels that exist for range tops and range bottoms. And yeah, we've got these two longs. So basically a 7-day and a weekly, which are slightly different numbers, which head up to that 78 and to that 77 levels. And we've got to close, inside, we've got to go up there and hit those targets, but then we've got to be able to hold that. Now, as far as the daily, I think, yeah, we've entered into that daily candle now, so it's disappeared off that list. So if we close up inside this daily candle, then the next target really is up around that 75. We're going to activate that 5-day, and that closes today. So if we get up inside 75 before the end of the day, we could end up closing inside that larger hold. That would be something that indicates a bit of a flip. Or we're going to close just below it, go up into it, hit it, and then have a bit of a retrace. And, retraces are normal in markets. Price go up, price come back a bit, price go up. It's just, if you're trending up, you just pull back less than what you went up. And if you're trending down, you go up less than what you came down. Market's ranging. And then in another 2 days' time, if we do hit that weekly level at the right point, so we've got that, well, it's actually at 7-day level, but if we hit that 7-day level and manage to do that in the next 2 days, we could end up closing up inside that 54-day hold. And that's when you can start to say, okay, maybe this is actually reversing, because once you're closing inside the hold, you got basically a 50% chance. Closing below holds, you've got almost a no chance that you're reversing, but if you're closing inside holds, you got a pretty good chance that you're actually starting to reverse. And we can really, we could close up inside a completed hold in 2 days as well. But that's pretty much what we're looking at there. So still a 77 and a 78 target. I think that 78 target is also some pretty high time frame backside resistance. So, that could be a final destination if we are going to have a bit of a bullish pump and then a dump. But yeah, we'll just have to see how things are going. But it is looking pretty good. If we look at, say, origin recents for Sol. So, oops, created Sol. Let's see. Yeah, so it's a bit more all over the place, as you can see with Sol, but we've created a couple of bullish origins down there at 65. We haven't really done too much because we've really just been going sideways since about the middle of July with this, not really creating range tops and range bottoms. We've got no potentials, I don't think, either on Sol at the moment, so it's really just dictated by BTC. And you can see we've got these bearish range levels on the 2-day and the 3-day, which are sitting up there at 83. Everything else is above that. So what that's really telling us is that, if we lose 65, we've got a problem. And then we start to head down. If we lose, or if we get over 83, then genuinely we're starting to break through, the tops of things. And if we look at current levels in development, I'm pretty sure there are none. So we'll just double check that. This should come up with none. Yeah, so there are no levels really in development for Sol. It is genuinely just cruising sideways, and it's got to make a choice as to whether it breaks through 83 to head up, or whether it loses that whole 65, 66 area. And then you got a little bit of support down there, 63s. But it's all pretty small stuff. With Sol, it can break in a couple of days as far as if it loses these 10 and 12-day levels. So, all right. Let's jump into the charts and see what we see. Right, so after such a massive intro, you've probably got everything that's going on in my mind right now, but we'll just detail it down a little bit. So daily here, risk versus safety. So we've been rolling over on the risk versus safety. We've been shifting resistance trends to the upside. We've been creating some holds. Everything kind of looks like this just wants to come down, but it doesn't mean it doesn't take out, all of the so it doesn't mean it doesn't pump to the upside first, and take out a whole bunch of longs, although we did just sort of squeeze through that 73.845. Looks like a little short squeeze, just really low time frame short squeeze just popped in. So for close in 2 hours and 24 minutes, we want to get below these trends, all of these trends. If we can get below these, if we can get below the wick here, it's good, say 70.76. That's starting to get a little bullish. And if we do that, we're probably going to go up and take out those shorts. And if we touch those key levels we talked about, then we're also not going to create new resistance. So, and the key thing is not to create the resistance. Even if we pump up, take out shorts, dump down again, it's a dump to the downside is either going to be a liquidity grab because they want to go back up, and in which case they're not going to put resistance in their way. They're going to go up, they're going to basically take out shorts, but not create resistance, and then they'll dump back down, take out longs, and then go back up. So what we want to see is this basically close under all these trends, and ideally, some kind of engulfment. We've got the ability here to actually have a really bullish close if this is to push down below, say, 1, 2, 3 accumulation candles and close below, say, 70.62. And it could happen, like we've seen for how many months now? 6 months, 12 months? Probably been 12 months. We've seen these dumps that you get before closes, and everything is really bearish because we're in a bear market. And if you can remember back, if you've been through multiple cycles, well, guess what? The same thing can happen in reverse because you're in a bull market. So if this starts to crash down before closes and they leave it to the last minute and they pump out a whole bunch of bearish news and everybody starts to short and then they push this down in the last moments, guess what? It's just things are reversing. Those are the signs. So looks like we're getting a possible trend break. The wick's probably a bit too long there on that 2-day. So it looks like we might be engulfing. So for this to become not chop, but for this to become something bullish, the wick needs to go away on this candle. And if the wick goes away, it opens underneath the new trend, it has a hold level, it can keep on going down and trying to break down. So at the moment it's got signs that it's trying to move down, but it's not really super aggressively bullish at this point. Not 3-day, that's tomorrow. Okay, 4-day close, sneaking back in under the range trend, under the resistance trend, breaking the topside range trend. It's already touched the origins. Again, pretty good close if you're wanting to be bullish. Is it as bullish as it could be? Not really. It needs to engulf that full candle. And if it does that, that's a little bit more bullish. It also didn't touch the break level with this middle candle or this one. So once again, it's not really perfect bullish structure. It can reverse relatively easily. It's come from on those trends, but it's showing some signs that they're going to take out some shorts. Okay, under the trend, didn't touch. It's engulfed the body on the last candle, so it's a pretty natural rejection, but it hasn't engulfed the wick of the candle yet. So once again, it's a good close. It's breaking things. It's rolling over. We can see it's coming through the trend, but it's not technically breaking the trend. It needs the next candle to do so, and it needs to keep on going down for another 5 days. Yep, but okay, wrong side of the range trend, but still got the support trend. Already engulfed a couple candles ago, so it's gone up, it's rejected, it's come down. It's not really. If this closes blue, then it's the start of a distribution range, but at the moment it's a little bit more chop. If it closes blue, it's not really breaking the trend. It has to, if this was a super bullish close, this is going to come all the way back down below that 70.4 area, or engulf something. But it can be working towards it. Once it's on the wrong side of this range trend, then it's in a position where the next period could break something, but not yet. Okay, engulfing the body, so that's pretty good. Rejecting off the range trend, falling back inside the hold. Now these are all signs that we're starting to break down a little bit. The only negative thing here, as far as could they just create a bit of a trap, is you'll get like a really big range trend like this, and it's still over the top of it. So, you know, in that next 8-day period, if it wicks down through this range trend, it can easily push back up again. So this is a bit of a trap to build that range trend there, but you know, we've got that one above. We're effectively creating that wedge. Looks like we're breaking the normal trend today. So again, these are all signs that it really is trying to roll over, and that will mean that we start to see flow back into risk. But the reason it's not really super bullish at this point is because we're rolling over, but we're still making these support trends. You know, where markets really genuinely are going to move in one direction, they'll bring this down here. They'll open on the wrong side of the trend that moves, and then they'll just tap it and dump again. So, you know, that's like a sudden shift in this candle just before the close, something that gets below, say, that 70.6%. That ends up creating a range trend and shifting a trend and ending on the wrong side of both of them and makes a hold. That's a really, you know, that's a telling close. If that kind of thing happens, you're basically, you know, you're changing direction. At the moment, we could just be taking out some shorts still, because that's not a full-on bullish close yet. We have, you know, 2 hours to go. Same sort of thing here. We will be creating a range trend to the downside. We're not really breaking the one to the upside. We're already pumping up a little bit on BTC and Sol and stuff as we speak, so we're getting these little low time frame, you see, low time frame wicks going up. So we've got to get a bit higher on that to make any kind of difference. It's good that this goes up though, because we've got that short that's going to come in up here somewhere, and we need to get it over and done with if we're actually going to get a good close in 2 days. So it's moving now is good, even if it pulls back. It gives it time. So we're obviously here on the 10-day. If we get in underneath the body for close, that's good. You can get more bullish if it gets in under the trend. So 70.6s. It's going to create a range trend. Now, one of the best ways to dump price is to have a instant loss of range trends. So if this creates this range trend on the bottom here, but we get a close, say, under 70.5%, then it can automatically open on the wrong side of this, violate it, and just dump. You know, so that's the kind of close you want to see happen if they really are going to flow some money back into risk. So coming through the trends, yeah, I mean, this could go either way. On the 20-day, if it closes a yellow candle, it's a break of trend, in which case it could sweep one direction, then come back to the other. Although this break at 71.6, this will become an origin. today. And so then in the next 20 days, if this candle closes blue and the price does not go back up and it just keeps falling, then the 71.6 becomes the range resistance, and then in another 20 days, the 71.14 becomes the range resistance. So you can sort of see how that can escalate to the downside, and then your risk assets can continue to go up, or money flow into risk continues. Kind of not much of anything close unless it comes down a little bit more, gets on the other side of the trend. Then it can sort of go between the two trends. And engulfing, so that's starting to look good. Range trend on the other side. Okay, we need this. If we engulf here and we get this range trend, we're probably going to bounce between the two of them. If we go up first, and I know I say this a lot, but if this goes up first, it's bullish, because going up on this chart is taking out longs. And if you've got something to the downside here, going up first to take out longs, to come down to take out shorts is bullish behavior. If you go down first, you're taking out shorts, and then if you bounce off this and you got a hold target to the upside, which becomes the target of the trend, then you've got basically bearish behavior. Now it is also breaking a trend, so that's going to be a new one from there to there. It looks like it might. Getting some TPs. Finally, all my weekly TPs are playing out. Chicken tenders. Right, so if we bounce off this, we're in a pretty tight wedge there. We've got to hold. It could also cross through the trend if it comes down just a little bit more. So that's starting to look like it's gaining some steam. Hold level forming, creeping back under that range trend. This is good stuff. You know, we moved the resistance to the top on the prior candle. We went up, we hit the resistance, we've pulled back below the range trend because we came from on top of it. We're creating a hold, we're getting back in under the range trend. We're creating an interior trend break. It's very steep. It's going to be on the wrong side of all of that. This is a 50-day time frame. This is starting to show signs of building the structure required for a reversal back to risk. No trend break here unless it goes up. This could get bearish, obviously, if this was to head up to 70.95 or higher and then create another trend break to push to the upside. But if it stays blue, that's good. And we've got range trends waiting for us to bounce the price if we go a bit lower. So I still don't think there's longs are going to survive, but it looks like the structure is getting created to be swept. So, you know, what are we doing here? We're actually creating a failure to go back to trend, crossing through the wrong side of the trend. We're under everything. This is perfect structure to basically wick up, then come down. So, you know, take out some longs and then come back down. So it'll be interesting to see if we actually close up inside these holds and whether we hit that 65, 800-ish level on BTC and we get rid of the resistance, and or whether we keep it there. Okay. And this is still bearish. It's got, the range trend is getting polarized today. So we shifted it to the top. We had a first touch rejection. Sorry, not shifted it, created it, I should say. We created it. We had a first touch rejection. We're closing yellow. We're breaking that actual downtrend. So by all rights, this is going to want to go up. The only thing that's really going to stop it is if it loses this trend today, gets on the wrong side of it, which it could do, but probably won't. It means it's got to come back down below 69.56. So that's a pretty big pullback on that candle. So more likely what's going to happen is we'll break the trend, we'll shift the trend to the top side, we'll probably have a push back up, we've polarized that range trend, so we may go through this, hit that, and then there could be enough force on that thing now that it's a polarized range trend to actually knock it right down. So still indicates longs probably won't survive. Okay, under trend, it's good. But we are creating some pretty big support trends here. So this will come through here. And that's going to be sitting roughly 68, 69. So it wouldn't even surprise me if we went to 68 or 69 here, and then had some kind of reaction to that and a big wick to the upside. This is 466 days, and the problem with this is that it's 466 days that actually has support, and it's actually engulfing. And although this is a blue candle, it's not a proper hard close. We're closing over the top of this hold still. If the market was really, really ready to flip super bullish, this candle would be inside this hold body, not outside of it. So, we've got the ability to sweep here, maybe there. It does, the direction's the hard part. If it goes one way, you just know that it'll end up coming the other. So for us to be bullish and think, okay, we're going to have a normal cycle, we need to see this sweep this trend. And somewhere in that 466-day period, it needs to then go for the other one, which then means it needs to close inside here. And that's about half of a cycle, right? So about 1,000 days or whatever for a cycle in one direction. It needs to close under this trend, have some kind of pullback in the middle of the cycle like it typically does, and then push down to whatever the low is going to be. So that's bigger stuff. Now let's look at some of these multi-weeks. I think we're engulfing this 59.15, that somewhere in there could probably be the top of the next cycle. What I don't like is seeing some of what then could come next or before. If there's going to be a major crash, it's going to be bigger than it's ever been. So this is the kind of level up here at about 81.54 that gets created on this time frame today, and the target for that is down here at 59. So we're either going to kick off some cycle by going down first, which is normal, in which case we hit that hold and then we come back to that trend and you get a bigger crash than you've ever seen before, or you go up and we get that crash first, hit that, and then a big rejection off that back down to the hold, and that's your new cycle. So we could still go either way. And most of the shorter term stuff, like the weekly here, if this candle, or is this actually 3 weeks, sorry, if this candle closes blue, it's a break of the range trend, but it's only really bullish if it can come down and open the next one below the support trend as well. Then it's showing signs of being bullish. If it loses this range trend but holds the normal trend, it can still just recover. So that's probably quite an important close for the shorter term of things today. Want to get under that trend. And then we've got this origin sitting down here at 69.58. And then we've got this untested level down here at 68. So, looking at that bigger picture, that's where our really big trends are. So even if we close on the wrong side of this, we might come down here and shoot up. We might come down here and shoot up to the upside. So they're all possibles. That just means we've taken out a whole bunch of shorts, and then we bounce off some of those really big trends that you just saw on those prior time frames. So similar sort of thing going on here. We might create this hold. We may close on the wrong side of the trend here on the 7 week, but we do have this big range trend sitting down here at 68. So there is a whole bunch of confluence, smaller, medium, and large time frame all sitting in that 68 area that has to break. Otherwise, it's just a trap, and we just pull back to that and we shoot up again. And this is a high time frame. What are we? 21 week high time frame trend break if it closes as a yellow candle, but it will shift the trend into resistance. It's still above the hold. So effectively, we're fighting between a hold and this trend becomes our wedge. So somewhere in the next 21 weeks, we're either going to be up here and we close, we're going to be down here and we close. This would obviously go that way. This could go that way. And I suppose last but not least is we wick out, hit that resistance to the upside, and then pull back down and close. So it is a range trend break as well. That's not bullish. A yellow candle here is not bullish. It typically means you're going to try and smash something to the upside by breaking this trend. But the way it's creating that resistance above and already has that resistance above, once it's done whatever it's going to do in here, it should come back to here. So that will be next cycle. But once again, that's another trend probably to watch for. And it's sitting down around those 64s. We've got this untouched break level down here at 58. So there's lots of structure that sort of indicates that our next cycle may stop there. We could even go there before we see down here. Okay, that's risk with safety. Let's have a look at the totals, see what they're looking like. Okay, so totals on the daily. At this stage, it's not closing up inside the hold. It's just sort of hovering below the trend or on the trend. It is up over the prior broken trend. It is engulfing. It basically needs to just sneak up a bit more, and that could be quite bullish. If it gets up above the body of the prior hold, so like 1.89, if it gets up inside that resistance hold 1.89, anything at that 1.89 is going to be opening over the top of everything and inside, so that would be bullish. Outside of that, it's kind of half bullish because it's still under the trend and it's creating a hold, so that just means it can dump back down and reject off the trend back to the hold. So same thing here, it's just below the origin. Now, it's not a blue candle below the origin, so that's good, but being above the origin is where you need to be if you actually want to try and recover it. At this stage, it's just troll, and it is in a position that in the next 2 days, it could lose it. So that's not good. If we get above it, we could get another trolling, or we could get some kind of actual definitive close. So yeah, total still not looking doji. A blue candle here loses a range trend, that would be bearish. A yellow candle, sorry, it's already actually lost the range trend. A blue candle here is just another candle underneath the range trend. We are up inside the wick of the hold. We're not quite up inside that backside one. So that's still got a day to go, or 2 days to go. Ignore me there. What are we doing here? So touch. It's not created any resistance to the upside. It has hit the break level to the downside. The next 4 days, it's still holding the range trend. It's just trolling that hold. It is just inside the wick at the moment. So maybe a little bit more bullish than bearish there. And looks like we're on the wrong side of the trend. We're up out of the body of the hold, and we're just absolutely trolling. So same thing, pretty much across the board. 1.89 or higher needs to just creep up a little bit. Creeping up a little bit inside the hold, over top of the trend. That's kind of what we want to see. And let's see if any of this is little bit more defined, but it doesn't really look that way. So the weekly is just up inside the hold. It's creating a range trend and it's got a hold. So if this closes up over top of the normal trend support, wick down could just be a flush of longs, target to the upside. If it goes up first, flush of shorts, it may try to push back down to the downside. And then next week, if it closes under these trends, big fall. Next week, if it closes over these trends and inside this hold, maybe it goes up. So that's starting to show some signs of life. What do we got going on here? So 8-day is just toying with whether it creates this hold or not. So once again, if we close up inside that, so 1.89 plus, really need to turn on the extra decimals here. But yeah, we're already at 1.89. We need to be a little bit higher than the 1.89 that we're at right now. And then we could be up inside that hold, crossing over the trend, starting to look a little bit better. And we've got 10-day close today. So I think the minimum move on the 10-day already played out. That was our move up to 63,300, which was based off this hold created here. But it's not a trend break. So that was, sorry, I should say 63. This is basically the totals version of the BTC move that was in play. Okay, here we are. Interior trend break, not an exterior, but it does look like it's getting back up over the range trend. Okay, so if this recovers that range trend, it could target the 1.98 broken break there, which never quite got a retest last time, so it's still pending. It could also target the hold, which would be really bullish. That's a 2.19 move, maybe the 50% of this whole candle here, something like that, which is in between 2.1. So that's getting into a very strong position, but not technically a trend break at this stage. Same thing here. It could engulf. It's really close. So we've got an hour and 57 minutes to go. If it gets up over that 1.89 sort of area, engulfs this prior candle, it's getting pretty strong. It's up inside the backside candle. So that's starting to look all right. This is recovering a break, bouncing off a range trend. Now, this is something that I might have mentioned yesterday. If it closes yellow, it's going to be a trend break, and it never actually touched that hold candle. It fell very slightly short of that hold candle. So if it gets back up inside the break, breaks the downtrend, it's got a target which is basically like a double top up there at 198, maybe a fraction higher if it pushes up into the hold a bit. But that's a 40-day break is actually looking pretty good. It's looking pretty good. Trends are a bit weird on this one because of how they moved, but if it hits that hold, it's going to be pushing from the wrong side of the trend. I still struggle to be really bullish on this. Like, I'd be really bullish if it closed up over 197 or 198 today, because that would be in the hold and above the trend, and then a massive air gap to the upside and untested targets to target. But it's just, it looks like it wants to push up, but it just also looks like it wants to push up from a position where it can be a trap. Okay, this has already touched the wick of the hold. It's already hit the back of the trend, but it's still closing over the range trend. So again, another push up and down, very possible in this area. We've not tagged, the break to the upside or the break to the downside on this time frame at this point. It looks like we're gonna, if we get a blue candle, we'll be shifting trend. If we get a yellow candle, we're not breaking trend. It's really indecisive, but I don't think I don't think I could say that this is not a trap at this stage. We could break the trend, move the trend to the bottom, go back up. If we break the trend, we also break this break. We're inside the body of the hold still. Nothing stops us from doing a double top or higher even before we turn around, reject, and come down and target the newly moved trend. So that's very possible. Now that could also close yellow. Now if it closes yellow, it's a trend break of the interior trend from that position of weakness with no support moving to the underside other than what already exists. So we could break the trend, push up, hit something, come down. We don't actually have support moving. If we close blue, then we move support. We've got a target for the hold. We could come up to do the retest of the break and then come down. It's all very on the fence, not really, really bullish. You know, big trend breaks still happening. So now we're talking 100-day timeframes. We've got favorable wicks. You know, this is decent structure. We're going to break this, you know, huge range trend to the upside. We could come back up and retest that, but it's going to be from the wrong side of the break. We could bounce between the trend and the break. We could go to the break and then come down to break the trend. You know, these are all possible moves that happen at this stage. It's below this really old hold, you know, back here in 2021. Nothing stops that from rejecting again. Can happen. And we may just be setting up for this final sweep because in 100 days time, if we've swept through this trend, hit these lower trends, bounce back up above the trend, recover it, then that's a bottom. You know, that's how they end up looking. Nothing much going on here. We're engulfing the body of a candle, about 2.33. We're back inside the hold there at 2.02. That's about all that. Okay. Really, really big engulfment sitting up there at 2.45. Going to get a new trend. Is it favorable? It does look like it's just enough for that to be over top of that trend. So the bearish thing would be to reject off the wick of the hold over here, which would be 2.02. The bullish thing would be to go all the way back up to 2.44. And in 233 days, we can do all of the above. We can dive the new trend for liquidity. We can head back up to the hold. That, in my opinion, would be a very bullish thing to happen. Close inside the hold, continue up, all very, very bullish. Normal cycle stuff. Or what could happen is we could just tap this, go here. This, in my opinion, would be very bearish, and then come through the trend. So, yeah, I'm going to be the least trusting person ever of price action if we see it head up into this immediately. We'll see. Okay. Getting some pretty big trends here. And as you can see, this one we're on the wrong side of it. So 466 days, even if we travel up to that 2.13, we do have the ability to reject off that, come all the way back down to the hold. Body of the hold down there, it's untested at 1.18. It's a pretty epic fall if that happens. And the other area would just be this 50% mark, which, you know, we've already tagged the 50% of that entire distribution. Technically, it's enough. If it wants to go bullish, it can go up. And if it wants to take out all the shorts and have some major market crash, it can reject off this trend and go a lot lower. Okay. Bunch of yellow candles. What's this? 3-week close. So shorter term, the 3-week close looks like it's deciding blue versus yellow. So blue is a loss or a break of the 1.93. Yellow is not. Either way, it's the wick's long enough that if it breaks a trend, it's got support. That break touched is going to become a 3-week origin on the totals today. So if it closes blue, it could engulf this candle and then push up a bit higher. We didn't. No, maybe we did. You know, it looks like we tested that up there. Okay. So 7-week is currently below trend, but not breaking it. It has hit this bottom origin and it hasn't gone back to that 209 yet. So, you know, this is just a good example of what can translate into a trap. So 1, 2, 3 accumulation periods, making this 209 actually not just a break of a range, but it's also the backside of a set of 3. So if it comes at that from the wrong side of the trend, hits that, and then has a violent rejection off it, that's pretty standard practice for traps. So, and 21-week is going to open above the trend that it's just tagged, but it's also going to be below the one above. So this is, for this to have been bullish, it needed to bounce off that trend and recover this one to the top side. At this stage, it could travel up to the one at the top side, definitely. Sweep through it for a bit even. But overall, it's bullish. Sorry, bearish. Also, this origin that's sitting here, it's failed its retest, and that's about that 2.5. So it could go back up to the backside of that from the wrong side of all the trends. You got the hold all the way up there at 2.72. First point of rejection here really is just the backside of this trend at 2.05. So it's pretty big stuff. And if it rejects the backside of that trend, the target is going to be lower trends or the holds. So I can't help but look at this and just think that there is still the potential of just a huge dump. You know, it's very different from last cycle. We were coming down last cycle, like you can see here, but we weren't creating resistance. You know, the first resistance we created last cycle was the top, that right there. And that was basically an origin that was created by the close of this blue candle, and that's why this rejected here and why we got that big pullback down into here. So this cycle's very different. We're creating hold level resistance. We're closing on the wrong side of trends. It's just not great structure. That was our trend there previously. So we bounced off it, came up, hit the top, came down, closed underneath, came down, and then that trend shifted to there, which then we never created this hold, never got underneath here. We went up, we engulfed this, we created the upside, we started to array the trend to the upside, and the first new big trend created was by the wick of this blue candle, and we're on the wrong side of it. So for people who sort of think we're at a bottom, what they should be considering is we're actually more like here. Okay, we're opening on the wrong side of the trend, and the difference back here is we didn't even have a hold level, to the upside. We weren't really creating a lot of resistance. All we had was the trend resistance. Over here we got the trend resistance, and we might need to keep coming down if we're actually going to find anything that's really going to be support. And the other side of it too is, and this is where potentially the theory of we might not get a higher high next cycle. It is possible we get a lower high. And because if we come from the wrong side of this trend, 21 weeks from now, we could hit this and we could just come back the other way to the trend, or even back down to this lower hold. So you almost just want this to get out of the way, go lower first, find support, then start recovering trends, and then continue to the upside. But yeah, over here, what's happening right now is more like what was here. And that was only 50% of the way down, when that happened. This, it's a bit hard to say it's a bottom. Okay, let's have a look at BTC. Right, so BTC on the daily, we're going to get those origins today, which we talked about in that really long intro. But we're not closing up inside the body of the hold. At this stage, we are up inside the wick, so that's getting into that greedy area. So if it was to continue to push up to about 63.9, it's going to hit the body of the hold. Could have a rejection on that, back to the trend, back to the hold. The fact that we're engulfing and creating an origin at the same time on the daily typically means we're going to get a range off this candle. We're already over the 63,677.3, which is the 1618 of that range. So getting continuation into the 6.5s or 6.6s, or 6.4, 6.47, 6.4571 would be the next level of that range. It is looking like it wants to keep going up, but remember, we've got to get back up above that 65,588 in the next 48 hours if we want to close inside some of those bigger holds, and also if we want to stop the creation of a 6-day origin resistance or top of range. So there's a lot riding on this closing inside the hold. If it pumps up before the end of the day, like a little one of those suspicious cat meme pumps, and gets up over that 63,943 before the end of the day, that's starting to be quite bullish, and it's closing inside the hold and building ranges, building origins on the daily, and it's probably going to push up. Okay, so just to put in perspective, our previous one-day break was 61, 62, 62, origin touched. Yeah, this is quite a reasonable shift of support if we do create a couple of origin supports here. And then we have, where is that one day? Yeah, a lot higher up. Okay. So sneaking back into the body, sneaking over the trend on the 2-day. Ideally, once again, much like the totals, kind of needs to be a bit higher. In itself, this is not really a bullish close unless it starts to recover some of these bigger levels, 64s and 64.5s in the next couple of days, at least. It's actually a little bit tricky for this to get where we need it to be, unless it goes up a bit more today. So over 63,856, or some kind of really decent pump up over that 63, 64 origin. But we really need to see it today if we're actually going to get to the 65s and have a sustainable move in the next 48 hours. Alternatively, maybe we still stop the resistance, but if we do it in the next 48 hours, but we've closed here today, going back up and hitting that 65, 588 resistance level and stopping the 6-day range top is going to be from the wrong side of everything in the next 48 hours, unless it goes higher now. Okay. Yeah, this looks like it's going to open just on trend or above trend, outside a hold, still above the range trend. Once again, it's got to get a bit higher. It's got to get inside the wick of that hold candle if it wants to be semi-decent. Okay, what else we got going on? So we're still holding trend. We're not really breaking trend. We're not up inside the hold. So everything's still saying we need a little bit more of a push before the end of the day here. Something over that 63,800. Same here. So it looks like still under trend, still creating a downside hold on the weekly unless we can close back up inside that. Same thing. So we're getting out of the body of the hold again, but we're still under the wick of the next hold and still under the trend. So looks like we might get a array of the support trend. So we could get a good old push between these two. The weekly can reject us back down again into the trend, but the trend could send us back up. So still kind of looks a bit trappy. Let's see. How would my opinion change? Well, we've got to get back up over that. We've got to get in this hold. If we get inside that hold in the next hour and 37 minutes and shift that trend, then we have trend support and we're inside the hold. So that's different. Looks like the 8-day is also just on the border of creating an engulfment to the downside, still underneath the trend. Yeah, once again, nothing super bullish about this. It could push up and hit that trend. If this hold doesn't stop it, if this origin doesn't stop it, then that trend is going to end up pushing down to this range trend or the 59 area again. So it's got to get inside that hole before the end of today, or it's creating more resistance to send us down to a sweep of longs. This could cross through the trend. Still got the hold. Yep. Untouched origin down there at 58. So let's see. Looks like it's gonna, at this particular moment, it looks like it might end up on the wrong side of the trend. Just another sign that says we have to push back up a bit. And it is inside the wick of the hold, the prior hold. So really it's got to get over 64s to be bullish. And it still just looks kind of trappy. Not a real trend break, but we are getting a hold, but we're not outside of the wick. Let's see. This is a trend break. And we've already tapped the wick of the hold, so that target's kind of already done. We've already tapped the body. Trend is moving to the top side. It's not too bad. It can open over the top of it. Really need this to create a hold. Some kind of close once again over that sort of 64, 500 area. Definitely, or above. Need a last minute short squeeze, last minute pump if that's going to become bullish. Sneaking back up above the break, bounced off the range trend. It's tapped the wick of the hold. It hasn't hit the body. It is a trend break. The pump could still get that bit more out of that pump, but it's not a sustainable position really. Could just pump up into the body of this hold, reject the body of the hold, come down. It would have to spend 40 days up inside that hold to close inside, and that seems a little unlikely at this point. Okay, bouncing off the range trend. It's still holding the support trends. It's inside the wick area of the hold. It's got this untested level down here. We haven't hit the body of the hold yet, but we're still under the wick. Let's see. Yeah, we haven't really gone to any of the minimum levels for this. If it closes blue, it's another break of that break level to the upside. So the most bullish thing that could happen from this is a retest of that, but it looks like it would be a trap. The most bearish thing that could happen is a dump before close and end up on the wrong side of this trend. So if we head to 62s in the next hour and 32 minutes, it's not good. Okay. Big trend break, big loss of range trend at the same time. So retest is always a possibility. We'd have to go down to 61 to hit this trend. And then we could stop at the body of the hold, the wick of the hold, anything up around that area could technically stop us, or we go through and we hit the break, or the most bullish thing could happen is we go to basically 85 and we hit the backside of that range trend. That's also possible. So, much like everything else, when we hit these bigger time frames, we've got trend support moving to where we need it to be, but we can always dive that. So even coming all the way down into this lower area here to bounce and come back up is possible in the next 100 days, and that is that's kind of in line with the time frames that we're seeing. Okay, we've still got the hold sitting down in the 48s or lower to catch this, but we're on the wrong side of the trends. Nothing much is changing. Same thing here. Nothing much is changing. Still got the lower trend down here in the 40s. Got the hold untested. Rejecting off the backside of the trend. Right, bigger stuff. Let's see. Yep, new trend, wrong side of trend. 48s, 50% of the holds, like around 44, and the untested hold down there at the bottom is about 31. So that's, what else we got? Not much there. 3-week looks like if it closes blue, it's a break of trend, hard close of a break level. The wick looks kind of long enough to put it into a, whoops, scroll wheel gone crazy. The wick looks long enough to move into a supportive position. Could give it a push back to the upside, but it still seems to be quite trappy. Let's see. So yeah, if this closes blue, we'll get some new support below us. But as you see, it could just push back up into any of this and end up coming back down. If it closes yellow, it's a trend break. We don't get the shift of support to the bottom, and we'd still have resistance to deal with above. Even though we haven't technically lost the levels, we're still on the wrong side of the levels. So that's kind of a damned if you do, damned if you don't situation. If this was really bullish, it would be closing up over these trends and up over this 64,936 level, but not now. That's not bullish. Bouncing off the trend, but not back inside the hold. Same thing. Needs a last minute pump. Needs to get inside these holds. It's also a hard close of that 74, and it's not a trend break. If it flips to a yellow candle, I could be quite bullish about that. Bouncing off the trend, making a yellow candle, breaking the interior downtrend, not losing the break level. That would all be quite bullish. But that means a close over 65,820-ish. Okay. And much like the totals, it's just on the wrong side of everything. This is, again, what we saw last cycle. And if we push back up, we could go as high as 69, 70k before we hit the backside of that trend. But if we do hit the backside of that trend and it rejects, instead of getting recovered, down it goes. Off we go to see the next trend down at 47, 48. It's BTC. So as you can see, we're at a point where the market is capable of rolling over. Today's closes are important. Yesterday's were important. They're all pretty important closes, as we currently stand. But they're not quite bullish enough at this point to really be recovering key levels universally across all these timeframes. Okay, let's check out Sol BTC. So Sol BTC on the daily, same story really. It is looking like it might engulf. It could open on the top side of the resistance trend. It's still under the prior broken trend, and it needs one more day to convert this break into a lower origin on the daily. So it is not in a perfectly bullish position. It's kind of in a almost could get there tomorrow bullish position, or it could be back down at that break and not creating the support. Bouncing off the trend, but it hasn't hit the topside trend yet. So looking at the 2-day close, it's probably going to push up and touch that trend tomorrow. If it gets above it today, it's bullish. If it stays below the cross of the trends today and closes, then it's likely just to hit it and reject, because it's not quite engulfing that prior candle. It's basically, it is creating the ability to make a 2-day origin range base if it was to go up for another day up for another 2 days, then come back but not touch this lower level. So it could do it in the next 2 to 4 days, or it could just tap the backside of this trend and reject all the way back down again, which looks more likely at that point. Okay, we've bounced between the trend and the hold here. So this was our 3-day close from a few days ago. We managed to sneak back up to the hold, but we haven't closed inside the body of the hold, so that's needs to do that soon. Trend break on the 4-day. This doesn't look too bad. If it can sneak up a little bit more, then it will be inside the wick of the hold. It has touched the body of the hold, so it's going to create a resistance range trend. It's engulfing, so it's creating a hold. So this is going to become a very tight little area for breakout. 4 days open above, could push to the upside. 4 days open below, big reject to the downside. So that's starting to become a real decision moment. So this has come back up. It's hit the hold. It hasn't closed inside the hold. It's getting to the point where it is going to cross over the trend, but it needs to be a bit higher if it's going to have a sustainable push. It needs that hold, not to be under that hold. So something over that 116662, around there. And this is bouncing off the lower trend. Funny thing about this time frame is it's, the weekly here is it's got a lot of room to move. It's not really hit anything. So we've hit the support trend. We haven't done a retest of the prior broken trend on either side. So, you've got this ability to have some big dump and some big pump. And I think it's just a case of liquidity and interest. They need people to be in the game, because it really should come up and smack this topside level at some point, and most likely this bottom one as well. Overall, I see it as a bit of a bullish position to start at. Like if it happens next week, if we wick down here, touch this, come back up, and then go up there, well, that's quite bullish because we've started above these trends. But if it keeps on bleeding and grinding down and opens a candle under these trends, then I'd see it as quite bearish. So it's yeah, just kind of in the middle of nowhere. We are waiting for something. Maybe Trump will send a tweet out about the war being over and Iran will actually agree to it for once. So who knows? I don't know if you've seen that, but it's almost hilarious. Just one party sends a tweet and the other saying that the other party says something, then the other party sends a tweet just saying, no, that's a lie. Really? Okay. Sneaking up over that hold on the 8-day, but still under the trend. Not enough. Yeah, it's just not enough to really be bullish at this stage. That could be a trend break. If it stays blue, could move to a supportive position. Could flip yellow before the end of the day. Hasn't tested the hold at the bottom. So that's pushing. So that didn't break the break because it's a blue candle. Hasn't touched the body of the hold. It's just trolling the wick. So if it closes inside that wick, you might get a further push to the downside, then a bit of a bounce, and then who knows, it all comes down to where it closes. But that's still got those support trends. It's not breaking the resistance. It's just nowhere. Looks like it'll get a slight array. I mean, overall, these trends arraying to the upside, so not coming all the way back down, is typically seen as a little bit bullish because you're getting that support is shifting to higher points, but nothing's really breaking. So it just takes one big dump and that thing goes through all that. It's holding above the wick. It's not really breaking the trend. Next candle could. Looks like it might open just under. It's really trolling it. That at this stage, I would have to say that's going to be under the exterior trend. Untested body of the hold down here roughly lines up with the trend, so it's probably going to be, there'll probably be a bearish moment upcoming for that, unless it can sneak back up above. And again, no trend break, just hovering around the wick of that hold candle. It's either going to close above it and create some reasonable structure, or it's going to close inside of it and be a bit bearish. Could it push up and give a higher high? It's possible. Hit the trend, hit the hold, then come back. It's possible. Do we go up before down or down before up? That's inside the hold. That's not great. It's on the wrong side of the trend. Yeah, so this needs to be up higher if it's going to be bullish. This is more likely to reject and then come back down. It's got, now we're starting to see that 8,000 level again. So a lot of these closes so far are not quite good enough. Now the problem is if they're not quite good enough, it's almost like they don't want it to actually be able to recover from here. And then when we move into something like this is ultimately quite a bearish close if it closes under the trend. So it can just tap the back of that trend on the next candle, and then it's got a hold level untested, and it's got an origin retest waiting for it. So these are really high probability downside moves. So they're just sitting there waiting, and this is potentially on the wrong side of the trend. This is definitely on the wrong side of the trend. And it's getting an array. So it looks like it might open on the supportive side, but possibly inside the hold candle still. Has failed to close inside the upper hold candle. So it could push to the other side of the trend. It's not a very good close. That's creating a really big resistance hold candle up there at 1300 and something. Looks like it's shifting the trend. So from a high time frame perspective, this has got a possible trend that it's still under. It's really close. It's got a hold level it's creating. It's got a trend it's shifting. So it's got this backside hold, which is just trolling at the moment. If this goes down any more before close, it is really bearish. If it goes up a little bit before close, it could tap the trend and head to the hold. Sudden pump, big takeout of shorts, hit the hold, and then potential rejection back down again. The other thing, of course, that could happen is it can go up first, which is, like I say, generally a bearish thing to happen. Leave the trend behind, go up first, hit the hold, flush out shorts. Everyone gets really bullish, and then it pushes back down. And another sort of bearish scenario is that the body of this whole candle rejects, which would be a huge dump. That's about 12022. It's got to get up over that hold, 12053. So hour and 14 minutes. This is moving into a supportive position, trend-wise, and it's good. We're above it, but we are also looking like we're borderline on that 50%. Yep, so we don't want to be closing below that 50%. So at the moment, it's not too bad. It's just above where it needs to be, shifting the trend into support. Okay. Not too much you can do with that. That's not creating a hold, so that's good. This is creating a range trend, but it's still under a range trend. This is a tight little wedge. As you can see, break. It's pretty scary. Something's going to happen here. Now we're inside this whole candle. We're not really creating a hold to the downside. Looks like a good old incoming Darth Maul, really. Wick one way or the other, or both. And creating a body hold, but not a wick hold. Not really breaking the trend. We haven't tested the new trend support since it's shifted. Got the body of the hold up there still. So after looking at all of this, it really wouldn't surprise me if we see those 13, that sort of 13,000, 13920 type level in the 1.3s anyway. But if we go up and hit that first, it wouldn't surprise me then if we come back down to the trends or below. If we go down first and leave those targets behind, maybe that's the bottom, and then we roll back up and go up to those eventually. Okay, yep, shifting trend support. These are really big trends, you know, they were the ones from the previous bottom. So they are breaking, and we are in between. So got holds. something like this here, which, oops, wrong candle. Down to that 1.7 area. Sorry, down to that 7.031 area. That would be your most bearish sort of outcome there, but it's definitely getting towards crunch time. The worst stuff about the structure is that it's not actually in a position for the next candle to break it. So it's down too low, still under the range trend. It's got the support trend, it's got the range trend happening, and it really makes you wonder about when I should say the bottom is actually going to be, because for a 21-week candle to be under that range trend and under that hold level, you'd think that if they want this to be a bottom, they would at least open above that trend. Because then in that next 21 weeks, it can go down and it can go up, but it's in a position where it can go up and break, and then continue on up to all these holds, they're all kind of tested in some way. So it just seems like these closes are too bearish for the time frame that we're in. Okay, let's have a look at Sol. Okay, so Sol on the daily. The key level is the 73,640, the body of the hold. Like I showed in the intro, we went to 73,632, I think it was. Then we did the rejection. We came back down to the target. So it's almost like that was a little bit of a front run, a little bit of a miscalculation. If we close up over the trend, it is possible that we could push up and break through this hold. And closing over that 73,640 adds to that probability as well. We've got that prior trend retested up there at 75. We're starting, just because we're showing a bit of weakness at the moment, we're starting to see some liquidity coming, more liquidity around 75 to 77. People are sort of going, okay, cool, it's just another lower high, and they're starting to short. But yeah, if we do close up inside the hold, we might, and above the trend, you might go and take that liquidity yet. So that's our daily. Let's have a look at the bigger stuff. 2-day closing back above the trend, so that's adding to that. And it looks like it's just engulfing the body at the stage. So not super bullish, but not really bearish either. 3 days got a bit to go. Could be a range trend break if it just closes yellow. So that's the trolls are out in full force on the 4-day, just making sure that stays as a doji to the very last minute. And of course, it could close yellow but be on the wrong side of the support trend as well, which looks like what they're trying to do. That means any kind of range trend break has got resistance pretty nearby. It could push up and just reject back again. A pump before the end of the day changes the world, when it comes to this stuff. So some kind of close over 74,200, which is about where we were rejected. So as we're getting close to the close of these timeframes, you'll notice these rejections come in at key levels where they basically are telling you yes or no, we do or don't want to close over this trend. So at this stage, an hour and 6 minutes to go, and it's really got to get above that 74,200 if it wants to try and keep moving up. And then any kind of engulfment then is very bullish. So that's 74,494. If it got above there. And then any kind of close inside the hold is what we're looking for. But at this stage, we're seeing a possible break with a move straight into resistance. Okay. And then the 5-day close. We're back above the break level. We're still under the trends. We're still under the range trends. It's, like I say, it's got to go up. And it doesn't look like we've actually touched that 5-day hold level perfectly. Haven't touched the wick, haven't touched the body, so we've still got that resistance sitting there waiting for us. Weekly, it's basically at the 50% mark, maybe just slightly over the 50% mark of the two range trends. So we created this local range trend, we've created this local range trend, we've done the trade or the move between them. We're out of the body of the hold, but in the wick, we're in between the body and the hold of the wick here. We're just above the 50% of the cross of the two range trends. Maybe we open over the top of the new trend. We could then go for a bit of a run up to the trend that we're breaking, which is this one up here. From the wrong side of everything, you'd have to sustain it for a week and then get another good week to close above it. Yeah, so really this is it's just in the middle. You could really not be any more in the middle than that on the weekly. So first touch rejection, maybe the range trend again, but we've already had that. So that was the first touch reject, that was the first touch support. Either way we go, it's now the second time that we hit either one of those. Yeah, this is literally just 50% close one way or the other. That's kind of already done its thing. We crossed between the trends. We've gone up and down. Looks like we're going to lose the range trend. So, you know, the bigger picture is we're going to break this range trend today. Do we retest it to take out those shorts? Possibly. That could hit 78. Do we just drop because we've broken the range trend and then hunt for a lower level? And we'd have to look all the way over here on the backside, and it's we do have maybe the trend that supports us, but yeah, so the 8-day looks quite bearish. The 7-day or weekly looks kind of in the middle. And this is a very similar thing that happened to a lot of people on BTC. When it was at the top, you know, the 7-day actually looked slightly positive. Or the weekly looked slightly positive, like it was going to go up, and the 8-day lost a range trend. And when the 8-day lost the range trend on the weekly close, we just dumped hard out. So just bear in mind, bigger time frame look bad, smaller time frame looks tricky. People watch weeklies; they don't watch 8-day time frames. And it wouldn't surprise me if it's just history playing out. Hide the obscure break on something. Okay. 10-day looks like an interior trend break. We've got a hold back up there at 74.9. We haven't gone up to that topside trend. Still could. So this will be a cross between the trends. Untouched origin and a hold. So 66 is well and truly back on the cards, and 75 could trigger it, or it could go all the way between the trends, which actually means 66 is on the cards, as is 87 or 86. So this is our 20-day. So not a trend break. It's creating a support trend, and it looks like it's going to be on the wrong side. Still under the resistance trend. 79, maybe slightly above, is where it's going to run into that resistance trend again. Still got the hold to the upside. Got the body of the hold at 85. It's also an untested break. So, you know, do we go there? Maybe. But from the wrong side of everything, from the looks of it. So these closes are bearish closes. looks like a break of the 78,942 origin on the 25-day. 48 would be the untested level below. It's between the trends. This is a very, very, very bearish close. So we are breaking that breaking an origin. We're shifting this trend. Now, it's kind of it, really. If that trend does not recover the structure and send it up for a higher close in the next 25 days, this is just nasty. Okay, so it's the first hard, excuse me, hard close and loss of this really big hole candle. Hard close and loss of the origin. It's below the backside hole candle, which is at 75,666. 75,667. It's below the middle. Yeah, if that trend, and it's below the range trend, if that does not recover that, it's toast. And if it gets really bullish and heads up to 78, that's kind of where your trappy area comes in on that next candle. Range trend, broken origin, dip and bounce, or go straight up and be bearish, and then dump, very possible. Yeah, that close looks right over that one. Okay, and this is rejected off the hold. It's still under the break. It's got a range trend to come hit down here at 55. It's got these untested levels down here. It is a trend break. It hasn't touched these lower support trends yet. So trend break means it's going to want to try and push up, but it's a trend break straight into resistance. So this is, again, not looking super flash. Everything just screams trap. Okay. If it pulls back anymore, then it will be under the new trend. If it stays above it, at least it's coming from the right place. A dip and a bounce, but so far we're not seeing a way for it not to dip. At least it's not losing this. Okay, so not a trend break. It's under the support trend, but it's holding that range trend. So it could travel up into the support trend, reject off the backside of it, come down. And then somewhere in the next 50 days, it could even drag its way back up above the range trend. It could bounce the range trend, so down first, sweep up, but it's pretty bearish. Where is something bullish? 95, break level, losing it again today. It's underneath all of the holds. Trend is not shifting on that. Okay, that trend is toast. Nothing much shifting there. Creating another really big hold at 109. Good old 109. But we don't have anything to bounce off yet to go to 109. Looking at that. Okay, this one we do. Shifting another big trend to the bottom. Looks like and 95. So if some of these big trends, or I should say when some of these big trends kick in, we've got the ability to go up, but a bottom typically look like this. Shift of trend, dive liquidity, into hold, recover trend, bounce to hold, and at that point we don't know. At that point you might create a lower high and maybe this never sees anything bigger again, or we close inside of here and then we push up to break it and you get higher highs. So this is not like last time. So really big range trend. Looks just favorable at this point. And resistance at 78, starting at 78. So if we keep dumping in the next 55 minutes, we could close under this range trend, and that would be very, very bearish. If we stay above this range trend, we've got a massive hold there at 78, and I think this is the first time we've ever seen a really big hold level at 78 on the front side as part of a range trend move. So, you know, that's just a really good reason that if we do head anywhere near 78 to start taking some profits off the table, because it has 466 days to stuff around. So up into there, down to some massive dive, back up again and up. Maybe it never goes back up. So that's a pretty bearish looking piece of structure. Nothing there. 3 week is losing the range trend. It's under the trend support. It's in a position to break, but it can't unless it's a yellow candle. And if it goes below 72 today, well, it's a hold as well. Bearish. We've done the bounce between the trends. We're still under the trend. We're still under the hold on the 7 week. So bearish. How many times can I say bearish today? Favorable trend. 67 at one side, 103 at the other. Or 125 at the other. Or we go back to do a trend retest at 202. So all these numbers sound amazing, apart from the fact that there is a really big hold level getting created at 78. So, can this bounce this trend and go up to those levels? It's only possible if everyone becomes really, really, really bearish and they just keep on going up into the refined levels of the really big hold, in which case, the bears just keep getting taken out as the price moves up till eventually it rolls over and it goes lower. So the thing about that 78-day hold level is it actually introduces, $78 hold level, whatever it was, this one. This introduces a new long-term bottom target, which is probably, see, below zero. So it can't do this. It can't get all the way down here because it's below zero, but it's kind of like the end of the world for this thing if this hold rejects. And if it is going to do it, it's in the next 466 days. So it has to get back up inside here, stay inside here, close inside here, and then you can see new all-time highs. If that hold reverses, it's a massive move to the upside. So to be sort of like this. I say massive move, but minimum move, 430. By that point, everyone is screaming $1,000 soul, and it stops at 430. and we look at the market cap, and the market cap's gone up like fivefold, but the validators have taken all the tokens and sold them. So that's the kind of thing that happens in this world. You know, it could do a minimum body bounce. It's not huge. Means it never makes a higher high. Now 195. Yeah, it's so late in the game to be creating such a big resistance hold. Okay, nothing. Okay, right. Let's have a look at a couple of these others. So Sui on the daily is actually inside the hold, so it's looking better than Sol from that perspective. It hasn't got over the wick of this prior one. It is back up inside the trend on the daily. Some kind of close over 68.96 would be a little bit of daily flippish to bullish. It's a trend break. Got an untested hold up there. It's still very possible for this to jump back up to 71 cents. Just looking at that structure. And liquidity is there to do it. So very possible. Origin untouched. Yeah, no. Okay, not much else happening there. Where was that weekly? Here in the weekly's still in a bearish position, so daily looks okay, but the weekly needs to recover from this, or it's got a new hold at just under 71 cents, about 70.62, and it'll be on the wrong side of all the trends at 70. So the daily may fail if the weekly ends up stuck under all this. So that's about. I could probably go through all of them, but so far it looks like the daily looks okay. The weekly looks not so flash. 67 to 70.63. A lot of these moves have all played out. Yep. Trend to hold. It's all played out. So maybe not too much left for Sui to do. Yeah, new holds below trends. Overall, this is looking bearish. Yeah, losing that range trend. That's very bearish. Losing that range trend and creating a hold. Looks like the hold level's about 70.29. So, I wouldn't expect it to go up further than that now. It's losing the break level. It's rejected off the backside there. It's just super weak. So it's going to have the trend. Does it go up first, reject down, break trend, go lower? Does it go down, bounce up, go down? Does it go up, close inside? It's really in a horrible spot. Looks pretty bearish. Then you get things like this, which kind of throw a bit of a spanner in the works, because this hasn't gone to the hold level and it hasn't gone to the trend. And it just makes you wonder what's coming. Why are we sitting here like this? And normally when you create a trend and you create a hold, in markets with reasonable liquidity, you're going to trigger one side pretty quickly and you're going to move to the other. Back in the bull market, we used to post the moves that were created on a daily basis at daily close, and you got a couple hours into the day and most of the smaller moves had already triggered and played out. And now we're just sitting here between levels and not really activating things. So, the next drop to that trend could go all the way back up to do a retest of these broken levels or the holds. It just seems a bit odd where it's sitting. It's not breaking trend, but it's also not activating anything that could. And that's probably another part of it, really. This here, if this had touched that bottom hold and traveled up towards any of these retests at the top side, then this close would probably be a break of overall trend because it'd end up in a yellow candle. But yeah, just keeping it there, doing nothing. It's not really allowing any bigger structure to change. We'll get another trend break here. We've got a hold to the upside. What are they playing at? Yeah, so this will break today. It's got the ability to cleanly move between these two levels. What are we waiting for? Maybe they're wanting to dump this down lower just for the end of the day, get under 65 or 66 and on the wrong side. It's if you look at this move here, when it hit this trend, closed over the trend, bounced up, hit the wick of the hold, came back down. So we had the hold, we had the trend, we did the move. So we've got this stuff sitting there just waiting at the moment, and for whatever reason, it's just not doing anything. Hard closing higher levels, closing inside holds. Yeah, don't know. Bearish, bearish, bearish. Right. ETH. That's a monster of a hold. Okay. It's below the trends. It's nearly below that candle, as long as it doesn't go down below 1848 before the end of the day. But it's inside that hold. Yeah, it's just engulfing on the daily. Weekly still looks bad. It's lost that range trend again, so next week it can't break that. Doesn't stop it from wicking up above it again, or taking liquidity, or just tapping the backside of it and rejecting all the way down to the sneaky body of the hold down here that they didn't tag. So it could. The old something is coming, eh? That could be a break of range trend. So it's interesting. ETH could make a positive. Actually, it's already a broken range trend. It's already tested the break level up here. Hasn't quite retested the range trend. Stopped just above it. So does this take a dip, a sweep, and a pump? Maybe. It looks a lot more bullish just in general than others. Yeah, trend breaks. Untested hold to the upside. It's inside the... Yeah, it's inside the backside hold. So as long as they don't dump that before the end of the day, ETH's actually looking a lot better than others. And still got the backside of the trend here, still got the hold on the wrong side of the trend, so double top or higher, very possible. Snuck back up inside the break level. So it's going to open a candle inside the break level. It's got an untested hold to the upside. Everything there screams that it gets to go up again, having a little move to the upside. Trend break, favorable, open over the top, back up inside. It's bounced off the origin. It hasn't gone to the topside one yet. Can still move. Hasn't lost the topside one yet, actually. Maybe big money has finally decided to send ETH back up. This is trend break, favorable position. Still hasn't touched that origin, so it's still holding that range. Man, a lot of people are going to cry if ETH runs after they bag it for its technology and slowness and speed and expense, and don't know when they'll realize that really price has got nothing much to do with any of that. It's a case of if big money wants to buy down here and sell up here, they'll start moving this up. People will go, oh, look, Ether's back. And then they'll start buying up here as the big money starts selling up here. It's just the brutal game. Subtly untested body. Yeah. Then massive hold resistance getting created to the upside. So it overall looks like ETH probably wants to go on a bit of a run to the upside, but they're building resistance. That 4,000 break, 4,100 area becomes a origin today as well. So you're lucky that's not engulfing, or this thing would just be heading down, but that's also partly why you can see that there's something going on here, because it's not engulfing, creating an origin, not engulfing. So they don't want to really dump this thing to death at this point, or if they are going to dump it, it'll be a sweep because they're not building the resistance here to stop it. So that's, you could sweep all the way down lower, come back up, make an origin here and an origin here, and that could be your entire range for the next cycle. That's a really big trend break. And the trend ends up higher. And it's outside of the body of this hold. So, 2.5 or thereabouts when it hits the backside of this trend is something that could create a rejection. And if it doesn't, ETH will probably go higher next cycle. May not be by much, but you won't know till it hits the trend and possibly tries to wick through it, and by then there'll be some other structure. But this looks way better than other things. Not creating that big hold. Still hasn't recovered this area. So probably not immune to if there is a short-term pullback or pullback. It looks like it's a range trend break on the 7-week. That's the range trend from the top. That's breaking. So that's, again, bullish. Last time we broke, okay, so this was this trend coming down here. This was the range trend. This was the break. This is what happened to sweep the top. This is now the range trend. This is the break. Enough said. Eventually, it's probably going to be back up here. And if there is any kind of sweep down here, tag that or retest that broken trend before it pushes up. It's possible. It may reject off this one to trigger it. So up into the 2000 area. Do some kind of big sweep. Probably a FUD event or quote unquote black swan. And then off it goes. To eventually find its way back up. And we're getting a big trend shift. And subtly, they have not tagged the body of that hold. So, once again, any kind of sweep to the downside probably kicks off a push to the upside. Okay. That's ETH and Sui, and Hype's probably... should probably upload this video. Hype's just bouncing between a couple of range trends on the daily. Looks like it might recover that break. Still bouncing off the range trend, still got trend resistance. Bouncing off the trend, but closing under the other. Losing these upper levels. Yeah, wrong side of trend. When everyone was hyping on about hype and it was all the way up here and we were saying this thing's now building resistance and it's probably going to roll over. And your scenarios at that point were either that it was going to wick up, have a blow off top and come down, or it was just going to come down. And here we are. It came down. Yeah. So it's just toying with the idea of bouncing off that range trend, but underneath the resistances, losing these upper levels. Making some big holds, closing on the wrong side of very steep trends. Yeah. It'd be interesting to see what it does when it hits the top side of that break at 50 bucks if it gets there. Really big hold levels down at 37. So if this has another really successful cycle and it doesn't become victim of some hack or whatever, where they just rug pull it, yeah, it's probably a decent play for next cycle. Yeah, 2x, 3x type thing. The more institutions come into crypto, the more you got to start considering that 100x gains are just to trap you, really, and you might be lucky and get one. Or you got to think that institutions are happy with 10 and 20% a year and 30% a year. So when you've got something that goes up 100% in a year, like the next cycle for ETH could be 100 or 200% from whatever it bottoms at. And if that's the case, you know, an institution is pretty damn happy with 100 to 200%. Big hold levels getting formed, untested levels for retest below. Yeah. If this is going to have a sudden out of the blue pump, it could be off the wick of this, which is 50 bucks. So I wouldn't necessarily want to bet your entire bag on that, but you know, it could do that. Bounce here, head up there. So if you're going to start DCAing into this for long-term conviction, then maybe you start there with TPs from 68 and above. But I don't know. It seems a bit early, and it seems like we really should have some shock horror event. The trend is really awesome in that. It's going to come across here, like so, when this closes. So you have a hold, fully engulfed, can create a range, you got a trend target, anything down into here, and then up to that trend for next cycle. Minimum obligation TPs there at 68. And I don't know if I'd even bother to add to this position. If you do put or buy anything here at 50, I don't think I'd even consider adding to it unless I saw 39 or less. That would be long term. All right. It's a weekend, so there's no point really looking at the others. Leave it at that. Get this thing uploaded. YouTube's really slow at the moment for doing checks, so hopefully it's out a bit earlier than last time. Then I've got to take off for the afternoon, so probably won't be around. All right, catch you again on the next one.